In this video, we are going to learn about the Apex funded account threshold. Hello traders. If you're trying to pass an evaluation for Apex trader funding, or if you already have a performance account and you recently got funded, it's really important that you understand the Apex funded account threshold so you can avoid costly mistakes and save your money for better things like a deep sea fishing trip with your best friends, a bowling ball for your wife, or a gold-plated Cybertruck. If you're anything like me, you might have blown up an account or two trying to get funded. You might have had that feeling like, I don't get it, I was up. I've been trading well today. Why did I fail? This is so unfair. And trust me, I have been there. And it wasn't until I learned the things that I'm going to teach you in this video that I was able to get better results and start passing evaluations quickly and easily. In this video, you will learn what the Apex trailing drawdown threshold is, what your open profit peak balance is, and some pro tips to help you avoid blowing up accounts, so you can pass more evaluations without wasting your valuable time and money. So let's dive right in. I'm here on the Apex Trader Funding website, and you can see there are many different account sizes to choose from, and they all have different trailing drawdown thresholds. The account size you pick determines your trailing drawdown threshold. For this video, we are going to use the 50K evaluation account from Apex as an example. The 50K account has a $2,500 trailing drawdown threshold. Let me explain what that actually means. Let's say you have a brand new 50K account with no trades placed yet. We are going to use this graph to show you some of the examples of what's actually going on inside your account. Because I don't know about you, but I have personally blown up accounts that are in profit because I did not understand this, and that is so incredibly frustrating. Here's your initial balance. This is how much capital you start with. Because there are no trades placed in this account yet, this amount also represents your open profit peak balance. I'll explain that term in just a second. Since no trades have been placed yet in this account, your trailing drawdown threshold is currently at 47,500. In Rithmic, they call this your liquidate threshold value. In Tradovate, it's referred to as your drawdown auto liquidation level. Both of these terms refer to your trailing drawdown threshold. If at any point your account balance touches this trailing drawdown threshold, then your account will be blown and it's an automatic failure. You will either fail your evaluation or you will blow up your funded account. The distance between these two lines is $2,500. That's $50,000 minus $47,500, which equals $2,500, which is your current remaining drawdown. Meaning this is how much room you have before you hit the trailing drawdown threshold and blow up the account. Now the thing about Apex is, this threshold value is trailing. However, it doesn't trail your end of day balance like other more expensive prop firms. It trails your intraday highest open profit peak balance. Let me show you what I mean. Let's say you place a trade with one mini contract on the ES, which is the S&P 500 futures contract symbol. The ES is $50 a point per mini contract. So let's say that you place a winning trade for 10 points. That will be $500 in profit. This will affect your open profit peak balance, your trailing drawdown threshold, and your drawdown. Stay with me and I will show you what I mean. Let's take a look at this chart for the same example to help better illustrate what happens when we place a trade. Let's say that you entered on this bar immediately following this rejection candle. So we are long one ES contract at 52.65. We can see from the chart that the price moves in our favor and we get flat, or we close our position, at 52.75 and lock in 10 points. It is important to understand that in this example, we are closing this trade at 10 points as it is going up. We are closing it while the open position's profit is at the top of its range. We got in the position, and then it moved around a little bit, and we closed it while the position was moving in our favor, up at its peak. We didn't close it while it was rolling back on us, and this is important to note. We're going to look at this chart for another example where the profit is the same, but something very different happens. The following scenario is critical to understand because situations like these often lead people to blow up their accounts. So let's assume, again, that we decided to enter after this bar, where there was a rejection candle. This is the same entry as the previous example. We get long one ES contract at 52.65 even. This time the position goes all the way up here to 53.05, but we don't take profit. We're holding on for that winner chicken dinner. But the position fails to make a new high and we roll back down to 52.75. We take profit and lock in 10 points, which is exactly the same amount of profit as the previous example. However, because we held this position and it didn't lock in the profit right away, the position's open profit peak balance got all the way up to 53.05. That means that at the peak, the position had an open profit of $2,000. So we had our peak at 53.05. We subtract the entry price of 52.65, and we are left with 40 points. 40 times $50 for one ES contract equals $2,000. Both examples made the exact same amount of profit. That's 10 points with a single ES contract, which is $50 per point. They both are profitable and they both made $500 in profit. But for the purpose of passing an Apex evaluation or trying to hit your withdrawal target on a funded performance account, one of these examples leaves you in a much better position than the other. Let's go back to our first example. This is the one where we took profit right away while the price action is still on the way up. Because we added $500 from the profitable trade we took, the first thing that happens is that our account balance goes up to $50,500. And that becomes our new open profit peak balance. This is because we closed this trade on the way up without letting it roll back on us. That brings our account balance up to $50,500. Next, our trailing drawdown threshold, which was $47,500, also goes up by $500 to $48,000 because it's trailing your open profit peak balance, which increased by $500. And the distance between these two numbers is $2,500, which is how much drawdown you have after that first trade. Now, in the second example, the same thing happens, except we take the trade and its open profit goes up 40 points, bringing our open profit peak balance all the way up to $52,000. And while that's happening, the trailing threshold is following the open profit peak balance, so the trailing drawdown threshold is going to move up. The trailing drawdown threshold moves up to $49,500, which is $2,500 below the open profit peak balance of $52,000. We didn't close the position up there though, and it rolled back 30 points, leaving us 10 points of profit, which is $500, exactly the same as the first example. The account balances after the trades are the same in both examples, but the distance between the account balance and the trailing drawdown threshold in this example is only $1,000. And that means you are much closer to blowing up than it might seem. Even though you were profitable, even though the trade was a winner in both examples. I want to show you a different example that shows what happens with the trailing drawdown threshold in an account if you decide to go max leverage. We're going to enter a trade on Sierra chart with a trailing stop order at max leverage, which is 10 contracts on the 50K account. I'm going to set this up so my stop order will represent the trailing drawdown threshold in the account, which is $2,500. So with 10 contracts on, each point in the S&P would be worth $500. So that means I will set my stop at 5 points, which will be $2,500 worth of drawdown. We're going to try to fill this full amount. Okay, now we have the position on. It's going against us right away, so the trailing stop's staying where it is. If it just goes straight into it, it'll hit it. But now, we'll see as it starts to go. We start to pull up, right? And now you see the trailing stop. That's the account balance stop right there, because I have it set as a trailing stop the same way. Risk $2,500. You can see that we're starting to push up, which is good because we're heading the way we want to go. But as we're heading the way that we want to go, this trailing stop is approaching our entry point. It's moving up with the open profit peak balance. So we'll go ahead and let it play out. There it goes. It moves it up a little bit more, moving it up a little bit more, a little bit more, a little bit more. And you can see now we're really close. We're really close to where we entered, because our drawdown, as when it reached the peak up there and starts rolling back on us, there's no room for error. You only have 5 points from the highest point, and it's not a good option if you put this amount of leverage on. While you can pass, sometimes in one trade you can pass, but the chances are highly likely that you're going to get stopped out. It was at this moment he knew he fucked up, and then you're going to blow the account. Is this predatory? That's the real question on many people's minds, and the truth is, it depends on how you look at it. If you want to avoid blowing up your accounts, you need to size down dramatically. And when you take the information I just gave you and you try to trade max position size, it's clear that the chances of entering somewhere that will give you the move you need to pass in one trade, it's actually pretty small. Putting on a lot of contracts is a surefire way to blow up your account. The longer you're in the position, the more likely you are to blow up and fail. So when does the trailing drawdown threshold stop trailing? It's different for evaluation accounts and for performance-funded accounts. Let's look at the Rithmic evaluation account guidelines for trailing drawdown thresholds first. With Rithmic, your trailing threshold will stop trailing the moment it reaches your profit target. The profit target for the 50K account is 53,000. So once it reaches this level, it will be locked here and not move up from this point, regardless of how much higher your open profit peak balance goes. Now, if you're in an evaluation account, your open profit peak balance would have to get all the way to 55,500, $2,500 above 53,000, in order for the trailing drawdown threshold to stop trailing. Reaching this level in an evaluation account is not necessary to pass evaluation. Anything above 5,300 passes, so close the position and stop trading. When Apex does their nightly update, you will pass the evaluation. For Tradovate, it's a little bit different. The trailing drawdown threshold does not stop trailing. It will continue to go up as your balance goes higher and higher. So as soon as you hit the profit target, you have passed the evaluation. So stop trading. There is no reason to continue to trade after you have hit your profit target. When do PA-funded account trailing drawdown thresholds stop trailing? The PA-funded accounts both stop trailing at the same time, regardless of whether it's a Tradovate account or a Rithmic account. The thresholds on these accounts stop trailing once your open peak balance surpasses the max drawdown amount of the account size you selected, plus $100. What the heck does that mean? So for a 50K account with a trailing drawdown threshold of $2,500, your account will stop trailing once your open profit peak balance reaches 52,600. At this point, your trailing threshold drawdown will become locked at 50,100. Let's look at it again with a visual example. And what I am teaching you here applies to all the account sizes, but we are going to stick with the 50K account because it's the one that's the most popular. So for a 50K account with a trailing drawdown threshold of $2,500, your trailing drawdown threshold will stop once your open profit peak balance reaches 52,600. And remember, that 52,600 is your initial balance of $50,000 plus $2,500 for your trailing drawdown threshold plus $100. And your trailing threshold drawdown will become locked at $50,100. If you make a withdrawal after you reach the withdrawal target for your account size, which is $53,000 for the 50K account, your trailing drawdown threshold won't go back down. Once it reaches this level, 50,100, it will remain the same regardless of any withdrawals you may take. So if you make a withdrawal of $500 and your account balance goes down to 52,500, your drawdown becomes $2,400. Or if you withdraw $1,000 and your account balance goes down to 52,000, your drawdown would be $1,900. Since your trailing drawdown threshold no longer moves, it is important to remember that you must adjust your risk management after the withdrawal so you don't blow up your account. Here are some pro tips to help you pass these evaluations. You need to pass the evaluation, trade your funded account, and then hit your withdrawal target in your funded account, all while you have that pesky trailing drawdown threshold to worry about. So here are some pro tips to help. Number 1, size appropriately. Honestly, most of the time, trading micros is a better option to manage your risk in these Apex accounts. I made this cheat sheet to help you size appropriately. I have included the maximum trailing threshold drawdown for each of the account sizes in Apex, and there are 2 columns of position size recommendations. The first set, which I will call standard position size, and the second set, which I will call max position size. The standard position size is for systems with a win rate of 40 to 60%. The max position size is for systems with a win rate of 60% or higher. You can see that the majority of the position sizes are micros only. It's only in the larger accounts that Apex offers where you would consider trading minis if your system has a high win rate. You don't want to trade these larger sizes if your win rate is low, because you'll put yourself in a bad spot quickly. So the safer bet is to stay small and use the recommendations that I've outlined in the third column and stick with the standard position sizes. The maximum position sizes are only for traders who have a proven strategy and are comfortable trading it with increased leverage. If that's you, great! You probably didn't need to watch this video in the first place, but the majority of people are better off staying small and properly managing risk if they are uncertain about their strategy or if they're newer to trading in general. Number 2, take profit quickly. That being said, oversizing a little bit to try to pass these evaluations is something that I've done myself. But when I am in an oversized position, I take my profits quickly. This is a safer way to manage the leverage that minis offer. I scalp my way towards the profit target. You want to take your profit quickly, so your open profit peak balance remains high. If you can do this consistently, you will be left with the maximum available drawdown. Remember in the first example where we took the profit as it was going up? We missed a lot of the move, but that's okay. What's more important is increasing your account balance consistently so you can hit the profit target without hitting your trailing drawdown threshold. Be patient. Remember that this is not a race. It does not matter how long it takes you to pass the evaluation. I know Apex often has the one-day pass sale, but it's better to avoid it because it just encourages gambling and promotes bad habits. Becoming a disciplined trader who trades the same system and setups over and over again is far more important to your long-term results. If you just throw a bunch of contracts on and hope for the best, you're not helping yourself in the long run. It's really a question of what moves you closer to your goals. Getting a funded account that you're just going to blow up anyway because you've developed bad habits YOLOing to pass the evaluations, or actually knowing how to trade and execute on your system patiently and consistently. Of those 2 examples, the consistent and patient person would still have a chance of trading the markets in a year or 2, but the impatient trader who is in a hurry will likely gamble their account and blow up like so many people often do. The good news is, once you pass, get your funded account, and then hit the withdrawal target, you won't have to worry about the trailing drawdown anymore. Remember, trailing drawdown threshold locks in your performance funded account after your open profit peak balance reaches a high enough point. You also don't have a daily drawdown limit like many other prop firms. So if you want a little bit more help with this is a cheat sheet that I created with all of the account sizes and balances at a glance. It includes the account sizes, the trailing threshold drawdown, the open profit peak balance you need to stop your PA or funded account from trailing, and your Apex funded account threshold level in your PA or funded account. And that brings us to the end of this video. If you enjoyed this video, please consider subscribing and hitting the like button. Please leave me a comment down below if you have any questions. And also, here is another video that might help you. Apex Trader Funding for Beginners. Thanks for watching, and remember to stay calm and trade on.